Hello, welcome back to Miner Network. I'm with Frank Holmes, the CEO of US Global Investors. Frank, thanks for coming on.
It's great to be here. It's amazing, being in Quebec City and think of a great mining province, the best in Canada, that they would get almost 600 investors and companies and management in Quebec City in June. I mean, this is very bullish sign.
Good. Well, you're saying it's a bullish sign. What's your current view on the market? Are things looking to improve at the moment?
Well, bad news is good news because bad news scares the heck out of politicians. And if you look at data points since 2001, the gold has been positive 82% of the time. You would not think so, the way the negative narrative is. Two, gold, interesting enough, is sort of dominating the volatility, is less than the S&P after COVID. It was always the S&P as risk, and then more risk was gold. It's now flipped. So I believe guys like Ray Dalio, who's now the largest hedge fund in the world, who loves gold as part of his parity trading, goes from 10% to 25% on and off of using gold. And I think if you look at it about 80% of the time, that's one reason the biggest hedge fund in the world.
Yeah. Why do you look at PMI over other things in particular for gold? What's the drive behind that?
So the drive behind PMI, we've gone back over probably 25 years of data. And what our concern was is to say, is there a pattern? And we discovered the pattern of 1 month, data comes out every month, versus the 3-month average. Is it staying positive? Is it growing? The real important number for most people is 50. So is it like, think of ice at 32 degrees. Is it above or below 32? It becomes water, it's ice water. And with that, what we're seeing is that China right now, when it fell below the 50 3 months ago, Germany is below the 50. That's a much more severe manufacturing contraction. And governments have historically panic and they start putting money into the system, infrastructure projects or whatever they have to put to get the economy going because it's a higher paying job. So what our studies show is that if the 1 month goes above the 3 months, oil goes up something like an 80% probability oil goes up its bottom. And if it falls below, oil falls. If we look at copper, so copper, steel, and oil are very strongly correlated to global PMIs, in particular China, because it's 50% plus 50% of all commodity demand. So I think that that's a very important factor that you've got. There's all this negative news of China and Germany. Germany's the breadbasket of Europe for manufacturing, and something's going to happen there. In the US, what's really positive is that the PMIs are not falling apart across the country, but airlines is another great leading indicator. So this time last year, the airlines were falling, warning of a slowdown in the economy, and rates are rising, and all of a sudden now it's up 25% from the lows, and it made it a 12-month high last week, so something's very positive, the JETS ETF, and that's listed also London, New York, Mexico City, and Lima. And it's a quant approach to looking at the airlines, and it owns the airports. So many, except for the US, there's no public airports. And it gives you a flavor of how powerful the force is out there for business. Other part is there's no discount. If you want to book a flight a year out, you would always get this big discount. Yep. So you pay for now, and then you know the economic activity because you're not going to pay for your hotel now, but you're going to pay for your ticket now. So it's a much stronger than hotels as a leading indicator. Other one is like silver. And the fact there's no discount a year out for airlines makes you say it's strong, and silver trades at a 40% premium. You try to get your hands on physical silver. In America, if you go to Nike store, they'll say there's no change. Since COVID, there's no pennies, there's no nickels, there's no dimes, there's no quarters. It's sold out. There's a change concern. And so coming back, you got to be think. I think that silver stocks, that premium is going to rise, and silver prices are going to rise the premium, not the premium fall.
When you touched on airlines there, you were talking about obviously that you can't now get a discount if you book in advance, right? How much of that do you think is airlines trying to make up the losses that they made over COVID, or is it more of an indicator of global travel and GDP increasing and actually there being this business back as normal and actually sort of growth in the economy globally?
It's indirectly, directly, it's 9% of global GDP. And in this last COVID crisis, the governments are much smarter in supporting the airlines. Because if you get laid off and go get unemployment insurance and you're a pilot, you just can't walk back up and get your job. You have to go through all this training again. So during this crisis, they kept all the pilots in training in simulators, so as soon as the economy started to turn, buckle up, we're up in the sky. And you can see, in particular, the other growth has been luxury goods. Chinese tourism is picking up. I was just in Europe and Milan, and you can see the Chinese dominated. Well, they go and buy luxury goods and jewelry. And I think that's an important factor, because out of 1.4 billion people, you have 140 million that have very high GDPs per capita. And so that we all know from studies that as soon as your family is making more than six-figure income, they just travel more. Yeah. It's just fact. And that demand, so the US got back to almost 2.7 million people flying a day. And that's what Homeland Security publishes this. So it's strong. China Airlines took off early in October, then they sort of plateaued, and now they're sort of wavering of this, worried about the economy. But I think they'll come up with they'll come up with a stimulus. And it's classic, you're mentioning to me, with the sort of new crackdown that China has, but they're always with a stick and a carrot. That's communism, that model. And so I remain really bullish, but what happens now in the monetary world, in monetary aggregates, is that government policies is zeros and ones. You got to think of it as binomial. It's really simple. Monetary fiscal, that's A or B. Monetary is also binomial. Money supply, interest rates. Money supply, interest rates. Fiscal, tax regulations, spend. Tax regulations, spend. Regulations are a quasi-taxation. So you have this, whenever you have this imbalance, you start to see metals like gold take off. Well, at this point right now, that spread, I think you're going to see money supply start to grow. Like in this century, gold has doubled what the S&P has performed. We have a very bullish scenario that is very different in the junior mining, say, than the crypto world I've found. Is the crypto people believe buy the dip and hold on for dear life. The junior mining space and the senior mining space says, oh, it's not good, we're out. Whereas they're saying, no, accumulate, because the world's population is growing faster, the technology is growing faster, and the need for these metals is even greater, and thus with all the regulations that are taking place, the cost of finding, developing has gone up. So right now, the cheapest assets are in the ground.
Yeah, true, but obviously we're in a scenario at the moment where copper's still below $4 per pound. We're obviously gold's sitting good, but you're seeing this cost inflation come through as well. I mean, the profitability of mining looks like it's been diminished with inflation. I guess to make this even more, we're going to need to see higher prices, right? Otherwise, where's the incentive for new mines to come into production? Well,
I showed you earlier, and I can show you the charts and the visuals, and I'll have them sent to you. But when that PMI of China 4 months ago went 1 month below 3 months, before it went below 50, copper fell right away on the concern. What's not come into the spending is the battle they have in the US government of getting the budget approved. And there is such big infrastructure spending in that budget that the demand for copper will explode. And what's happening now in the psychology of investors is their concern over China is a pound of copper, low grade in the US, does not look attractive. It will become attractive if we get into any global strife. So the protecting domestic food, protecting domestic metals and energy is becoming much more important. We see this in my other business, in HIVE crypto mining, building a greenhouse 100 miles south of the Arctic Circle in Sweden, because we can recycle that hydroelectricity, but we're going to produce the food, so there's no carbon footprint from Spain and Italy. But if there's another meltdown with Russia and Ukraine, or something else happening, then the food is going to be there. And the idea of protecting your own country and that basket from immigrants coming in in the channel. There's a great concern how many immigrants are coming across in the boat, coming across in Texas and the US. And so it's interesting to watch those dynamics play out, because the governments have a great concern of meeting those social needs, but they know they have to do job creation. So what the math shows with the monetary fiscal policy, they've been using MMT, modern monetary theory. The biggest country club in the world is a G20 finance ministers meetings. So they all talk to each other. There's collaboration like never before. They all cooperate with their central banks. So you just think of 20 countries dominate 80% of the whole world's economy. The finance ministers are all talking to each other, and the heads of the treasury and the central banks are all talking to each other. Every time they all coordinate a global stimulus, the amount of money supply is exponential. It's not linear. So those long-term investors are saying that bad news is good news, because they will panic and print the money, and that money starts flowing into the system, and gold and copper and iron, all these prices will have a huge surge, and we're going to have to live with higher inflation. Yep. That's a reality, and rates are not going to fall that much, and right now we're going through this adjustment phase. So buy real assets. And you're seeing in the art world, when Queen Elizabeth passed away, the Warhol art doubled, her picture. The Mao paintings came out at $1,000 from 71, 1,000 prints by Warhol, and each year he did a different color of Mao. Well, they went through the roof as China became a big part of the global economy, from $1,000 to $150,000 to $250,000. So if you limit the supply and you increase the demand, those prices go, according to Metcalfe's law, exponentially. The amount of money being printed to drive that isn't falling into Metcalfe's law. So we will get currency debasement, and it's not because you don't like the government, it's because it's the policy. The modern monetary theory policy will eventually blow up. But in the meantime, investors want to turn around and protect their own wealth and live thinking 10, 20 years out. What do they do with that? Get real assets, buy good art, buy gold jewelry, buy 24 karat gold jewelry. It's the best deal. Oh, I paid a 10% premium. It's nothing. You can buy gold coin right now, trades at a 10% premium. Silver jewelry, you can buy that in some places cheaper than you go buy a silver coin. So use your savings, and even if it's only $500, right? I'm going to buy something like that, which I can wear and enjoy, because all those assets that are going to grow in the next big wave.
Obviously, we're at a junior mining conference at the moment. The way you're talking in terms of monetary policy, and obviously you're saying there that you're expecting that we're in a bit of a lull at the moment with commodity prices, maybe not gold, but a lot of the other base metals. You're expecting these to jump up quite drastically by what you're saying there.
Yeah, they're going to catch up with inflation.
Yeah, so are you at the moment, obviously you're here at the Junior Mining Conference, are you here looking for opportunities in junior mining? Do you see this as an opportunity to get into the market while it's low and sort of ride that wave? Is that? Two
is to go around to see our investments.
Yeah.
We still have a substantial commitment to junior mining in Canada, which is about 80% of financing for junior mining, and Australia. So our gold analysts just came back from Morocco, and it's interesting that you get Canadian companies with US money going into a Canadian vehicle, and 100% of the assets in Morocco, or 100% of the assets are in Quebec. You know, it's really fascinating, but a lot of that money still comes through the US, through the Canadian vehicle. What's important is that it's common law. People don't realize that. How does this little island called the UK at one time dominate the world? Well, it's common law. You know, no common law country's ever gone bankrupt. Civil law countries have. The idea of private property rights, private property shareholder rights, patents on creativity, etc. All this has evolved over common law. The Chinese are the biggest copycats of everything. When they launched their Shanghai Stock Exchange, they read the book of Hong Kong and London. Common law is for all the rules if you get listed on the Shanghai Exchange. And so I think when you look at Quebec, you look at these other places, common law is just allows for the formation of capital and resolution of conflict much easier than one can imagine versus Chinese civil law. In Dubai, they have 1 square mile, basically, in downtown Dubai, where all the financial sector is. It's all British common law.
Yeah.
And around it is Sharia law, and the Sharia law judges will accept the common law, and they work in a beautiful symbiotic way, but the creativity, it comes with common law.
So you're saying if you are going to look at a junior mining company, they better be in a jurisdiction where there is common law in place?
Well, for financing, you're going into these countries in Canada, and 100% of the assets are in a religious country or whatever. The religious law is civil law.
Yeah.
And it just seems the resolution or shareholders' rights, et cetera, is better under common law. It's a big risk when they go to a civil law country, but you as an investor, and the royalty companies too know this, that common law is so important in that structure, which the average investor is not aware of. It is really significant. The proliferation and growth of GDP per capita of a huge country like Canada, Singapore, Hong Kong, New Zealand, huge landmass Australia, it's all common law.
Yeah.
And so what does it do? It fosters innovation and creativity and risk-taking different than a civil law country. Canada's unique because Quebec is quasi-civil law, but at the same time is committed to mining, but the nation runs on common law. It's really brilliant. It all works so beautifully. So as an investor, that's one of the boxes I tick off on the risk analysis. And the big part come here is that I gave a lecture yesterday, I felt like as a professor, and it was the junior mining companies have to do a better job using decentralized media platforms like yourself and narrate their story, because it's not going to go and get the story on CNN, it's not going to be on CBC Canada, it's not going to be on BBC in the UK, it's going to be on decentralized. So the whole idea of Bitcoin ecosystem is all about being decentralized. And most of the followers in that ecosystem that also all read from the same Old Testament of history as gold. Why you want to own gold? Because governments will print a lot of money. And I say the imbalance between the monetary and fiscal policy, the greater it is, the more gold you want in that country's currency. That's the way I look at it. But it's to me, it's interesting how you have this sort of concept of the ecosystem. And to get big institutional money, you have to have price discovery. To get price discovery, they have to turn around and get the story told. There's nothing easier than coming on your platform. And they go over that Kitco platform and they can tell the story there. And the more they do that, the shareholders that are in this ecosystem all over the world all of a sudden feel more confident, and they're learning from you. Hopefully the listeners today are learning something from me, but how I look at the world globally. But bad news is good news. There's bad news in PMI numbers. Governments will panic to print money. They have a propensity to use MMT, a modern portfolio, modern monetary theory, and that theory is very bullish for junior mining. And the last thing I want to show all your listeners is that whenever you're in a presidential election cycle in America, America is 4% of the world's population, 25% of the global's GDP. Whenever that president is a Democrat and the Republicans control Congress, markets are up 95% of the time positive. And if we get a turn in the commodities with the PMIs, which I think will happen in the second half, and bullish for the stock market, juniors will fly.
Fingers crossed. Frank, thank you for your time.
Thank you.